Good afternoon, everybody. Welcome to Trader Merlin Show. It is your Wednesday Hump Day edition. I hope you're... Oh, wow. I was playing with some graphics. I knew I messed up. This is what I should be showing you right here. Yes, we're off to the Pacific Northwest, I guess. And we're going to Northern California. Maybe some snow for me. Anyway, that was my my holiday version. I don't know why I did that one, but there you go. Let me take that ocean out of there and go back to my regular backdrop. There we go. Good to see you all. I see Philip Stroh says, first timer here. What took you so long, Philip? Where you been? Welcome to the show. This is, a wind down episode, really, as we get to the tail end of the year. I don't do a lot of trading. Most people that know me, the tail end, typically the last 2 weeks, I don't do any trading whatsoever. Although this week I'm keeping my eye on a couple of positions that I have because I want to sell some calls against those positions to generate some income. And I almost pulled the trigger on my silver today, but I did not do that. But I'll walk you through more about that. And as Jimmy T says, have a great Christmas season. Yeah, have a great holiday season, whatever it is that you celebrate. I guess the older I get, the less relevance I put on a specific holiday for its intended purpose, which, with the purpose of Christmas is, and more about appreciating all of our special time that we have here, limited time, as that clock is ticking for all of us. So do the most with it. Have some fun this holiday season. So let me go. Where's my Santa hat? I don't know, Eric. I don't know where my Santa hat is. I was actually going to wear it, but yeah, no Santa hat. I thought about doing something festive for you guys, but there we go. All right, let me run through a couple different things here. First, remember yesterday we talked about a question that came in from Peter about his son buying a car and not knowing what the best choice to do there for that vehicle was. There were a couple of things I want to just go back over. One of the reasons that most of us were saying don't buy a new car, and I think it was Liz or Lisa that brought this one up in here. You said, hey, listen, kids get in accidents more frequently than others. And I wanted to share this stat because it's one thing to say something. It's another to have facts to back it up. And so I brought this as the National something NCS agency. It says the number of drivers in crashes. Total drivers involved, 66,000 in crashes, which I think it seems light to me. I think there's more than 66,000 crashes a year. But I'll have to look at more. Oh, this is... fatalities. Let's just look at all crashes. Maybe that'll read. There we go. 23 million crashes a year. That's right. So there's only 66,000 fatalities. If you look here, we talked about that younger demographic being the troubled ones. It's these 25 to 44 seems to be the ones that are involved in most crashes. 25 to 35 is roughly... it's 22% of the total vehicle crashes are individuals between 25 and 34. So that's the first one. It was me that said, there you go, Liz. There you go. So yeah, that's why, I think everybody here had the general consensus of you should buy a used vehicle. Don't spend $32,000 on the car. Spend 10 grand. You can get a really nice used car for 10 grand. And if it gets dinged or scratched or beat up, you don't care. There was another really good comment that was sent in. Maybe it was actually on the YouTube channel. And I wish I could give the guy props because I can't remember the name. But he said, look, you should also make sure that it is a stick shift by a manual transmission. He says that when he bought a vehicle for his son, he made sure it was a manual transmission so he and his son could kind of have that bonding moment over, learning how to drive a manual transmission, which is a lost art. It's going to be like handwriting here in another couple of years. So anyway, wanted to wrap up there and just kind of, couldn't have been you, Lisa. All right. Yeah, but Saba, you don't want to buy a brand new car. That's what the whole argument was. You spend a lot more money for a new car and it's on a younger driver who most likely is going to have maybe not a full-blown accident, but maybe not take as good a care of their car as they should. I think the older we get, the more we realize, the value of an asset and why we should take care of our vehicles. As a kid, you're like, bro, I got a car. Let's go out and do donuts in the parking lot, right? That to me is, yeah. All right. Let's see. Skills Talk says, after 2 weeks off, I just finally got the Trader Merlin Show back on track. Yep. Yeah, it's a while to readjust, right? Ooh, Lisa, Toyota Sequoia, that's big. That's a big one. That's a big vehicle. Got to get the 4Runner, man. I love it. 4Runner. There we go. Yeah, my stepdad taught me in a Sonoma State University parking lot in a Toyota pickup truck with no power steering, 4x4 by the way, which was, it was so much work plus a stick shift, and I was stalling that thing left and right. Now I'm so glad he did. It's an art to drive a stick shift. Anyway, we're going off topic about cars, but I want to just kind of finish on that one. Let me run through kind of our top 7 marketplaces. Sorry, all my buttons are messed up because I added the snow one. I'm going to delete this guy right here. We'll remove it. And then all my buttons should be back to normal. There we go. Okay, now I'm back to normal. Excellent. All right, so here's our list of top 8. And, right away, a lot of people asking about the S&P. There was, I think, a little bit of miscommunication on the S&P, but let me look at the chart here in just a second, and I will answer that one. If you go down to the very bottom here, the worst performer on the day was the 10-year. We saw those yields continue to drop, and I've talked at length about why I think that is. 2.13% drop in the 10-year today. This is obviously not good for that inverted yield curve. When we go back and look at the inverted yield curve, everyone's expecting the short end to drop, but it's not. And the long end is dropping more aggressively. So that inversion of the yield curve is going to stay more inverted, right? The more that yield falls, the more likely this is going to be inverted longer, which is not a good thing. And here is your 10 and your 1 year today, drifting lower and lower and lower. And you know me, my feeling about trends. The trend is your friend till the bend at the end. Right, that thing's going to keep on drifting lower and lower and lower. So at this point, you can't fight that trend. I think that you're going to see this inversion continue to grow. And again, a lot of that having to do with demand building up for people trying to buy those 10 years, trying to get that lock-in, that long-term rate, as we talked about on yesterday's show. The Russell 2000, about time. Holy cow, a 1.6% slide today for the Russell to 2011 on the Russell futures. We broke above this kind of high I've had mapped out that goes back to August 1st of this year. We tiptoed across it, sold back down below it, then ripped above it yesterday. And it really looked like we were going to just come rocking even further to the upside there, but we didn't. Now, I've actually deleted the yellow box. You guys know that I had the yellow box on this giant range here. I've now taken it out. In my opinion, you've gone through it. You could argue, we could move this red line up here, that there's this area where we hit, which is right around 2060 on the Russell. Today we hit that one and then sold off from there. But the real choppy area of consolidation that's been in sideways for a year and a half now, in my opinion, is broken out of that one. So I took that box off, and I took the one off from back here that we liked back in 2021. All in all, even though it was down day today, things still looking good for the Russell. We'll see what kind of bad news the media spreads. Number 6, NASDAQ, 1.51% slide. Basically today erasing almost 4 days worth of gains, which is kind of surprising. There's really been this just unbridled enthusiasm, in my opinion, for the markets. And I don't quite get it. It really is what I believe to be the magnet of price theory, which is people talking about all-time highs. And it just kind of magically goes there. And then once it hits it, it's like, hey, wait a minute. Here we are at all-time highs, and we still aren't out of the woods yet. We have some problems going forward. A big question that you're probably all wondering is, well, where are we going to go from here, right? Where does this NASDAQ drift down to? I don't know. You have a very interesting thing happening with Apple and their whole watch and that patent infringement suit, which is going to ban the sale of their high-end Apple watches as of December 25th. What's really interesting about that, I don't know if you guys followed it, but basically Apple has been using the technology from somebody else without paying licensing fees or royalties or anything. So there's a big lawsuit. The other companies won that lawsuit. Therefore, Apple is going to have to not sell these watches. However, Apple can't sell them directly, but they can sell them through Walmart and Target and Best Buy, which makes absolutely no sense to me. So if I'm Apple, I'll just not sell them in the Apple store. I'll just sell all my inventory to Walmart and Target and Best Buy because they can sell the watch that I'm not allowed to sell myself. It doesn't make much sense to me, but hey, that's welcome to the legal system, right? So NASDAQ was one of your bigger down days today, down 1.51%. Here is the S&P 500, which most people are asking about. S&P down 1.46 as we speak right now. We'll look at that 1 minute. All right, so here's your S&P futures. We are just nothing overly exciting right now. I don't see anything that's that noteworthy. I see a couple people in here were saying, what about S&P? Well, what a sell-off day was a surprise. Where was the other one? That question I just mentioned. What happened to the ES at the end of the day? If you look at the end of day, right here we are. We are 2. Yeah. My clock is all messed up in my head. This is going to be off on Central Time. Bottom line is I think it's people just clearing themselves for the weekend. If I look at, let's just go look at the SPY just because I can see this near the close. There you go. Why did you have this abrupt sell-off and sharp sell-off really early on in the day? And I'm kind of bummed The reason I say I'm bummed is I am anticipating there being a Santa Claus rally starting this Friday. I do think you'll see it move up for the next 5 or 7 trading sessions, and then I want to short the hell out of this market in January. We'll see how it goes, but right now my plan is once January rolls around and I see things start to get a little bit weaker because we've been just way too strong, then I'll be looking to pull the trigger on some bigger short trades. So I kind of want this to keep moving up. I want it to have some nice rally. Let's go. Let's surge to all-time highs, break through, get more people on board, and that will make the fall even that much sweeter when it does happen. So that's my thinking. I was kind of disappointed to see today's sell-off, honestly. I wanted it to keep on rallying to the upside. But as far as what caused this specifically, I don't know. I think bottom line is it's people getting out before that holiday week. As you know, next week, we've got Monday as a closed market. We have Thursday, a lot of economic data coming out, including some housing pieces. But other than that, there's no real earnings. It's going to be a low volume week, which means low volume and small and big orders can have dramatic impacts. So I think people are just going the safety route and just clearing their plates on portfolios and positions and getting out of positions they may be in so they don't have any over the weekend risk, especially because it's a 3-day weekend. So that is what I think happened after hours. I don't know, Margaret. I don't exactly know what happened. And there was an interesting question that came through here from Larry, not Jacobson. Let me make this font a little bit bigger here. I have it rather small because I just copied it over from the email. 1 second here as I pop this one up for you guys, make it much bigger so you can see. And he said, boom, there it is. Do you think the ES got halted due to a big drop that was keeping it from dropping to the 46.15 and closing the gap? I didn't see it get halted. And if that's what you're referring to, Margaret, I'm not sure. I didn't see the halt. I wasn't trading this afternoon, so I was just not even paying attention to it if it did get halted. But typically, halts are going to be at a specific amount. And if something does get halted, what you'll see are dashes where it goes sideways for a little bit. And I didn't see anything like that. So I'm not exactly sure what you're referring to, Larry. But let me look at the numbers you talked about. He said, was it halted due to a big drop? Well, today was not a big drop, guys. Yeah, it was the biggest drop that the S&P's had in quite some time. But honestly, this is no big deal. I mean, S&P was down 1.39%. Who cares? I don't think that is any big deal, right? You need a 2-day pullback. Yeah, I hope so. Yeah, I didn't think there was a halt list, but the email came through and I was like, hold on, let me check. And I'm like, overnight is what 4%. 1 second, so I'm not sure I understand that one. But anyway, with that S&P, you mentioned 46.15, which is going to be, we got to go to the ES. Let me bring up the ES here for you. Hold on. Wrong chart. You got 46.15. I think he's looking at closing this gap here. That's the gap up from December 7th through December 8th. Could we close that? Sure, absolutely. Is that going to happen right now? I don't think so. Personally, I just don't think so. I think that there's too much positive attention on the markets. I think right now, just about everybody you talk to is talking about how bullish they are and how the market's hitting all-time highs and how strong this is going to be to the upside. So I don't know if I necessarily am buying a pullback down to 46.15 right now. It feels more like this is going to continue up and this is kind of shaking people out. Now, what I wanted to do is share this graphic here, just so you guys all know. This is for the equity markets, and this is the 3 halt levels that we have. So if at any point during the trading session, the market drops 7%. When I say the market, that's the SPX. It's not using S&P futures or the Dow or the NASDAQ. This is just off of the SPX, which is the S&P. That's what this is based off of. So a 7% drop, if the SPX drops 7%, at any point in the day, other than the last 15 minutes, it's halted for 15 minutes. So what they'll do, and this has happened before, we had this happen during COVID. We had multiple intraday halts. I believe back in 2020, we actually had we had level 2. We haven't gone to a level 3 yet, where they just shut it down for the whole day. That would be a 20% drop. So what happens is, if it drops 7% on the SPX, it's automatically halted. There will be no trading on that market for 15 minutes. Not just the symbol, but the entire market. So basically, the NASDAQ, the New York Stock Exchange, all trading is ceased for 15 minutes. And they're required to do that. I believe FINRA is the one that puts that rule in place. Now, after 15 minutes, the belief is it's allowing people to calm down, because as I'm sure many of you experience, you get this big surge sometimes where emotions get the best of you. And if markets are going, you've all seen this, right? Markets down 0.25%, and then it drops to 0.5%. Do you get emotional? Not really. But it goes from half to one. Now you're like, oh, and if it happens quickly, you're kind of going, oh wow, this is bad. Well, when that momentum kicks in and people get fearful, and all of a sudden it jumps from 1 to 2% in like 30 minutes or 20 minutes, all of a sudden algorithms are triggered, people start to freak out, selling just happens, and it hits so quickly, it'll go from 2 to 3 to 4 to 5 to 7% in like 10 minutes. It's crazy how the snowball effect happens. They do this to prevent it from going into absolute chaos and triggering all this automated selling. So I actually think it's a great thing. I think that the levels are too high. If you look here, 7% drop in the market is that's a butt pucker kind of moment. That's like, wow, oh my goodness, 7% is gigantic. So I personally would say if the S&P drops 5%, that's a monumental drop in one day. They freeze it, and then they open it back up. The next level 2, is if it drops 13%. Not an additional 13, but 13% total for the day. So that's what causes those things to freeze. Will be a 7% drop, a 13% drop. And if at any point it hits 20% down, it's closed for the rest of the day. The market will all exchanges will close for that day, and it'll resume tomorrow when the market opens. So that is... I wish pattern day trader like that. Wait 15 minutes and then you can day trade. Wouldn't that be nice? Yeah, they definitely need to upgrade a lot of the rules. But I wanted to share this with you guys because some of you may not know what those circuit breakers are. And if that ever happens to you, it's kind of scary. And personally, I think that there's trading opportunities off of this. I've actually did a show on this one in the past, but that you guys can look up on TraderMerlin. If you're ever in a situation that gets the lock limit down, so for example, in the futures market, when it hits lock limit down, they will hold it until the next day, until the market opens. So, we've got an election coming up next year. I'm pretty sure that on election night, you're going to get lock limit downs. It's just the craziness of those markets, and whoever ends up being president, it is what it is. It's not Democrat or Republican. It's just saying there's volatility there. So during the Trump-Clinton election, remember, the propaganda was that Hillary Clinton was going to win, and all of a sudden the numbers started to show that Trump was winning, and Hillary was supposed to win by a landslide. And I had shorted the S&P futures, and I had bought massive amounts of puts. So here's the thing. When you get a lock limit down, it means it can't go lower for that window of time. In this case, if you look at these two here, it can't go lower for 15 minutes. So which you can buy. You can buy something, you just can't sell lower than that price of 7%. Whatever the price is at 7%, you can't sell lower than that. But you can buy and play bounces. And a lot of time bounces happen, right? Because, let me grab my pen over here and see if I can do a little artwork for you. If I've got this floor established, bear with me, I'm moving cursors. Let's say here's the price coming down. And all of a sudden, it hits this low, and this right here is 7%, right? Well, it can only go up. It can only go up. So what I've done in the past is I've actually traded this, anticipating there being just a little bit of a bounce. Now, if the news is like apocalyptically bad, there's a danger. The danger is that the price falls. Erase that. Price falls down to that 7% line and just stays there and doesn't move. And you bought long expecting there to be a bounce. And it opens up 15 minutes later and just gaps down to the next 13% stop. That's the real danger here if you're trading these gaps like that, or these halts. Now, what happened in the Trump election one, let me go and create a new page here because I want you guys to see this one. And I know some of you saw this special I did years ago on this one, but here we are in the moment. I'll just create a new graphic, and I will make this a clear white one, and here we go. Okay, so I'm not sure why it's decided to... Oh, there we go. Okay. So here's what happened in that Trump election, just so you guys can understand. If we have the window of time, so here is, let me get my pen hopefully working here. Come on. Come on, pen. It's the last show of the week. I need to, there we go. Here is market close, right? That's the close. And that was at, I'm going to do Pacific time because it's easier for me, which is 1 p.m. All right, so market close, and going into the close is all this market volatility like this. The S&P futures, and then after our session, started to tick up, and then all of a sudden, once the realization was that Trump was going to potentially win this, it just kept falling and falling and falling and falling. I mean, it was crazy. It was just like this. And then all of a sudden, there's your lock limit. Now, the way the futures market worked, once it hits this limit, it can't trade below that until the day the equity market's open the next day. So keep in mind, that's going to be at 6:30 a.m. California time or Pacific time. That's your open. So it's really hard to write with this thing, guys. I apologize. There's my open. Come on, Merlin. Penmanship. Now, between 6:30 a.m. and 1 p.m. is only 6.5 trading hours. That means that this window of time is, 17 and a half hours in that period where the markets were technically closed. So why this was so interesting for me is we lock limited down like an hour into this, which means I still had 16 and a half hours for this thing to bounce up. So what was happening is when we lock limited down, I closed out all my short positions on the S&P futures, and I loaded the boat long. I know what you're thinking. You're like, oh my God, Merlin, that's crazy. You're going counter trend. Yeah, but I knew that if I bought long at this lock limit, I had 16 and a half hours for this market to open up. And the likelihood of it staying stuck lock limit down that entire time is very slim. Most likely there's going to be some bounces. So what happened was it did a couple bounces like this, and I made a few trades, selling a little bit of a pop. We're talking 3-4 points on the S&P, but I had like 10 lots on. Great opportunity. And then I would buy back in when it came back down to the lows. Now, what was unfortunate for me is I think the biggest I got in there was 20 contracts. I was trading pretty big. And what happened is let's say I went long right here, long 20, and then I sold out once it came back up here. So basically, this was my profit. By the time the market opened the next morning, the S&P looked like this. And if I just kept those 20 contracts on, I mean, we're talking a heavy six-figure gainer on the day. But anyway, going off topic, just to kind of explain lock limits and circuit breakers and things like that, is I guess a great way to, capitalize off lock limits and take advantage of that whole situation. Now, be very careful, because if you sorry, I don't know if I'm getting video through to you. It's acting all weird on me. If you do get stuck with a lock limit down, there's a big problem. And their issue is, if it lock limits down, there's a potential that the second it opens up after that 15-minute window, it'll gap down to the next lock limit down. That's real dangerous. So for those of you trading stocks and S&P futures like this, it's not as bad. If you're trading commodities, this is really bad. I would never touch a lock limit down on orange juice or corn or wheat or soybeans, pork bellies, lean hog, whatever it is. I would never do a lock limit, play lock limits for that reason, because what I've seen, and this comes from not just me trading them, but also talking to some of the best minds I know, your Craig Wiles, your Michael Youngs, your Bill Henners, your Bob Dunns. These guys have been on the floor with all these amazing floor traders who trade commodities. They'll tell you that if something like lock limits down, let's say orange juice, lock limits down, it may not move up 1 penny. So if you bought the low, you're thinking you're going to get a bounce. It opens up the next session, and all of a sudden lock limits down again and again and again, and you can get stuck in something that just goes into a free fall. So be extremely careful with commodities. If it's an index like the S&P, I don't worry about it too much. But the difference, and the reason I drew this example here, which is a horribly drawn example, is if I'm trading a lock limit down during regular market hours, I have a problem, and that is the locks are only 15 minutes. With that S&P, I had 17 and a half hours to go. I have a much bigger window of time to let that trade pan out, if that made sense to everybody. Hopefully it did. Let's see, what did I miss here? This drop is an opportunity to buy for the next rally. I think so, Pepe, but I'm just not brave enough right now. Again, I've taken a couple stingers over the past couple weeks and stuff that I traded aggressively in one of my I call it my gamble account, which when we do my statistics review, my 1% account did really well again. I have another trading account did very well, which is not a 1% account, but it's a more aggressive. But my gamble accounts, my just take total risks and have no stop losses, suffered massive losses this year, like 50% plus down. But that's straight gambling account, right? That's not using stop losses. That's trading the most volatile crap out there. Those ones got hurt. And the reason I love having those accounts is they're a smaller account, but it always reminds me of why you don't have a gamble account or gamble trade, because the probability of your overall consistent success is so much lower. But I'll share that with you probably January 2nd. Next week, just so you know, this is the last show for this week for anybody here. Sorry for those of you who just joined, but I'm going up to Northern California, see some family and friends for the holidays. I'll be back, and I'm going to do a Thursday, Friday show next week. I have Jerry Baldwin going to be on Thursday, and Larry Jacobson going to do a year-end review with me. I'm excited about that. I always love talking with Larry. We'll do a year-end review with Larry Jacobson and maybe a forecast for what he sees happening in 2024, and that will be on the Friday show, which will be the last show for the year. At this point, I think I will have done 207 shows this year. It was kind of interesting. Someone was talking to me about, I think it was Seinfeld, and how they only have like 200 shows. I'm like, wow, I do more shows than Seinfeld did in 8 years in 1 year. And I've done it repeatedly. I've done over 200 shows a year. Yes, the beauty of it. With no producer, no director, no nothing. All right, let me go. I think I've covered the stuff I wanted to cover. Let me go. We have a couple more markets, sorry. So that was the S&P 500. What happened after hours? Not really much of a big deal in my opinion there. The next one up here, going to be gold. Now, gold started off somewhat strong and then gave it back. We're up down 0.21% on gold for the day, closing at 2,047. Same thing with SLV. Silver had a nice gap up, but gave that back on the session. We were up at 22. What was the high? 22.31. And I tried to sell the 23.50 calls, but I just didn't get the 20. I wanted 23 cents for them, which would have given me a little bit more rate of return, but I didn't get it. So I do think you'll see silver rally up over the next week, and probably by the end of the year, I'll let you guys know on next week when we touch up the end of the year portfolio stuff. I'll let you know what I've done. Again, I'm in a lot of SLV. So might generate a few $1,000s worth of just premium on those options going forward. Oh, thank you, August. I appreciate you guys as well. Especially those who are, we've got some people here who are either gluttons for punishment or you just love what we do here. I say we. I've got my own show. It's our team, but you have a big group of regulars in here who are here almost are here every single day. Thank you guys so much. That's commitment, and hopefully it's helping you in your trading, whether it's reinforcement, creating new disciplines, rules, tactics, strategies, whatever. But thank you guys all for not just this year, but the years. I started this back in February of 2020, right as the whole OTA thing happened with COVID and everything got shut down. Power Trading Radio died, and I'm like, I love doing Power Trading Radio. I love it. So I was like, I'm not going to miss that opportunity. I was getting paid nicely to do Power Trading Radio. Now I don't get paid a damn thing to do this, but I still enjoy it. So there you go. Yeah, of course. Depends what you're going to mention. What are you going to mention? Of course. You can always talk about me. Obviously I'd love it if it was nice conversation, but people can, look, you guys can talk about me however you like. I think that I do my best to be, you can talk about it. Even if you make money, Trader MRO, it's pretty close to TraderMerlin. If you make money off of my name, that'd be an interesting one. I'd like to know how you're doing it. Oh, Les, thank you very much. I appreciate it, Les. That's awesome. Thank you so much. All right, let me go through. Trader, you're welcome to mention my name. I'm just curious what you would say. If you want me to come on your show, I'll come on your show too. Why not? If you look at crude oil, again, I'm going to leave this chart right here. I am going to leave this one right here because I'm telling you, I really have strong convictions. I feel like this is going to have a bit, just not a monumental rally, but I think crude oil is going to bounce back up and recoup some of the losses that it's had, at least 50% of it, and that's going to have a big impact. And I think that this is, going back to what we talked about, this is going to have an impact on the overall markets, the Federal Reserve, the whole rate situation. So this to me is, if I have to put all the factors on the plate for 2024, right now this is my number one. It's not inflation. This is what's going to drive inflation. So this would be my number one going forward. Oh, I don't do Twitch at all. It's funny because when I first started this show, the team that I was working with, Simon and TJ, Tim, Bo, they all immediately jumped to help me set this whole thing up, it was awesome. They set up a Twitch channel. I actually have a TraderMerlin on Twitch, but I don't know what the username and passwords are. Someone set it up for me a long time ago. But if you email me, TraderMRO, email me at TraderMerlin@gmail.com. Name numbers on the screen there. Let me know on time permitting. I'll come on there. I'm not sure what your show's about, but why not? I love going on other people's shows. August says that should move the CAD. Well, let's be honest. If you see crude oil in any oil exporting country, Canada, it's certainly going to have an impact on it. Right? It's certainly going to have an impact on those economies, and not just the price of crude oil, but holy cow, Joachim! I don't know what to say there, bud. That is a fantastic contribution. I really appreciate that. My goodness. Okay, Joachim says, I'm an OTA student for many years. The last two Merlin crypto years I enjoyed the most. Really? That's great. Think about it. Oh, man. You're making me blush over here. That is just fantastic. Very nice of you, Joachim. I'm glad that you have enjoyed the crypto thing and learned a lot over the years. You remember when we made that trade on Solana back in the CIL class, and I was talking about how I was buying a bunch more Solana? Oh, look at that trade recently. That thing's just been fantastic. I hope you're doing well with that crypto, and I hope that Guangzhou is treating you great over there in China. It's on my list to visit one of these days. But thank you very much, man. I appreciate that contribution. And Les, you guys, that was very nice of you guys. Didn't have to do that, but I do appreciate it. Ideally, what I want to get to the point where I have a sponsor or vendors that will pay me enough to want to just do the show full time, and that's the only thing I do. If I got this to the point that I could get just I have a specific number that if I could get just that and just do the Trader Merlin show, I would actually do all kinds of stuff and put 100% of my attention in. Right now, this show gets probably about 5% of my attention. So, it's there's a lot more I would like to do with this program, but you got to have money to do it. And hopefully, if it does ever get there, it would also be about bringing on a team. You need a team to make this happen. I do every single piece of the show, which is why I make a lot of mistakes, and there's issues with graphics and things like that. So, as you guys have seen, I make mistakes all the time. I'm only human. All right, so that was the crude oil piece. Again, I think that's your big wild card. To the comment that was made here about the Canadian dollar from August Texan, this is your other big factor, is what's going to happen with this dollar. The U.S. dollar, right? This is the dollar index. And if you see this continue to drift lower, if that dollar index keeps getting lower and lower and lower, that will most likely have a good impact on the Canadian dollar, right? And all of a sudden, you'll sponsor me? All right. So let's talk. Email me. Let's talk. Okay, I should get bar charts. CME won't touch me. CME won't. Mike says, I'm watching on my Roku on my big screen. There are no commercials like on my iPhone. Wow. There you go. Everybody watch it on Roku. Apparently they cut the commercials out of YouTube. That's kind of cool. All right, so let's look at this dollar index, right? We had this similar looking picture with the 10-year, and this was just interesting to me because I looked at the 10-year yield. I remember we fell aggressively, and then we had this 3 days of kind of hesitation right near an area of demand, which we are in the very bottom end of that demand zone right now. I'll be honest, I don't think that's going to hold. I think it'll probably knife through this, but it is a demand zone that goes back to this area of consolidation that goes back to July of this year. Now, I could make this demand zone a little bit wider, but for right now, I still think you're heading lower. Anyway, the reason I bring it up is if you look at the sell-off and then that 3-day hesitation, the dollar index has a similar pattern. You got that aggressive sell-off, kind of 3 days where it didn't do anything. Today bounced up a little bit. You've heard me mention this before, but typically, statistically, when you have something in a downtrend like this, and let's add on a moving average, shall we? Just so we can, 1 second as I bring it on here. Moving average, we'll just do a simple moving average, and I'll do something, great. I'll do something like a 20-period moving average. Great, let me get rid of Bollinger Bands. Actually, you know what, I can add Bollinger Bands. The moving average is in the middle. So the middle line here is your 20-period moving average on a Bollinger Band. You look at this, you've got a downtrend going. It's clear. We're making lower lows. We're making lower highs on the dollar index. And typically when you have consolidation, hesitation like it's doing right now, it will break down and continue in the direction of the trend. So that said, that's kind of one of the reasons I'm looking at this market thinking that you're going to see more bullishness is that dollar just keeps drifting lower and lower. If it does do that and continue, well, the equity market should continue to surge. Now, I think that's all going to stop at some point, but very interesting how it all ties together. Traders Army should sponsor you. I would like it, but unfortunately, given my association with Online Trading Academy, I'm pretty sure that would be someone would view that as a conflict of interest, and I would probably get in trouble somewhere. So, let's see. What else do we have from Bitcoin update? What a perfectly timed segment question, because my next one on the list, Bitcoin. All right. So to what I just talked about, when you have a trend in place and you get those either a pennant formation or just hesitation, typically it will break out in the direction of the prevailing trend. What's great about this is it doesn't look like much, even though Bitcoin is up 3% today on the Bitcoin futures. The expectation was it was going to break in the direction of the prevailing trend. So I'm now going to take this pennant formation, these two blue lines off the screen, and you'll look at the chart and go, oh, well, nothing really happened. You're right, it didn't make a new high, but it broke out of that consolidation, which is an important piece. So this is actually a really important piece going into the weekend. Of course, this is a closed market right now. Probably better to look at the spot market. And by the way, some crypto has been doing, some of it's been doing phenomenal over the last 24 hours. Some of my holdings just really killing it. You look at this picture right here. This is a very strong picture. Our tail today, our topping tail on the spot Bitcoin price was 44,291. Well, the highest we've had for a long time is 44,729. So we're almost there, and I do think you're going to see this move back to the upside. Again, I have been saying that I believe that we're going to see the spot Bitcoin ETF by the end of the year, and it keeps getting pushed further back and further back and further back. At this point, January, it's going to happen. It's going to happen one way or another. I really think it's going to happen in the next couple months. Remember, Gensler in the SEC has already said Bitcoin is a commodity, therefore it's not regulated by us. So it's not going to be an issue for them to list a spot Bitcoin ETF. Now, where the issue comes up is there are firms out there trying to list Ethereum. Spot Ethereum can't do that because they don't know whether Ethereum is a security. And now you have Ethereum futures products are struggling a little bit because of the uncertainty due to lack of clarity from the SEC. And I don't know if you guys caught this. You should all be mad as hell. But Coinbase has sued the SEC for regulatory clarity. Not for being unclear, but they want clarity. Like, I want clarity. I want to know, what is this? What is it? Is it security? Is it not? We have no real clear rules. And the SEC keeps saying everything is clear and defined, therefore we're not going to give you any more clarity. And Coinbase sued them and said, you need to provide clarity. And then out of that, the SEC has denied, they didn't sue them. They filed a petition for regulatory clarity by the SEC with regards to crypto. And the SEC responded back, no, there's no need for us to give you any clarity on it. So now Coinbase, it was a great thing because Coinbase is now taking this and now they're suing the SEC again and adding it to other parts of their lawsuit, just showing how the SEC is preventing clarity and business uncertainty. They're promoting risk to the end user by not letting us know what's what. Just crazy the SEC is doing that type of thing. Alan says definitely going to happen in the next couple of months, within the next 12. 100%. I'd bet anything it's going to be any amount of money. It's going to happen in the next 12 months. But if I was a wagering man, I would say there's in my mind a 95% probability of Q1. You heard Larry Fink say January, right? That's BlackRock, the big motivator. Of course, they're trying to get it, so they're saying January. But most of the other industry experts, not just that are applying for the Bitcoin ETF, but other industry experts are saying, yeah, you'll probably see it happen in January. So I definitely think Q1. Revamp the SEC is what's needed. There's a lot of things. I gave a presentation in Irvine last Thursday, and again, thanks to all the people that showed up. That was a fun one. I did enjoy that. It was told off the cuff, just Merlin being Merlin. When you look at the SEC, they're using rules that have been in place for 30, 40, 50 years. You look at the Howey test, which is from the 1950s. How can something from the 1950s tell you how to incorporate and understand technology, right? How do you look at technology companies and apply those same rules? They don't exist. It's like saying, what are they called? A farrier, right? A farrier is the guy that did horseshoes. It's like having a farrier, and all of a sudden you bring in the new Tesla, and they say, well, you got to use the farrier. It's like, yeah, but the Tesla doesn't have horseshoes. It has these things called tires. It's completely different. No, you got to use the farrier. He'll fix it for you. Go for it. It's like, well, hold on a second. That's archaic. So yeah, it's not just the SEC. It's the overall rules. We have too much bureaucracy in place, and let's just be honest, lobbying by banks. If you look at what's going on with Elizabeth Warren right now, Elizabeth Warren, there's documents that show the banks are paying her to go on this vigilante rampage against cryptocurrency. And to me, that's damaging, not just from the ignorance and reputation of her party, but also from the fact that we're pushing technology outside of the United States. We're forcing these companies to go, you're not going to work with us, We'll go to other places that do. That puts us further steps back, and that to me is the real big problem. So hopefully, when the election comes this year or next year, we can vote, make your voice heard, and I'll be writing my constituent or my parties I'm interested in, and making sure, are you pro digital assets? That's an important one to me. I'm not saying you legalize everything. I'm actually saying you get rid of most of it. There's a couple people in this industry who are heralded as being some of the more genuine and intelligent and ambassadors for cryptocurrency. People like Crypto Man Ran or Invest Answers. But they're out there promoting something called Bonk. Bonk is a meme coin. It's a shit coin that serves no purpose, right? And to me, if you're going to be an influencer, and to some degree, I guess you could say I'm an influencer, I'm going to be promoting crypto, but the stuff that's legit, the stuff that has like real prospects and actual future down the road, an application that may be used for our markets going forward. And it's not just a currency, it's the technology behind it. Is Bonk a decentralized exchange? No. Is Bonk a lending application where I can now take my crypto and lend it out to other people? No, it doesn't do anything like that. Is Bonk an identity? No, it does nothing. Yet here's the chart of Bonk. It blows my mind that these influencers who are heralded as being so great. Here's BONK. This to me is fraudulent. This is the scam that we're trying to protect consumers against. Is this kind of garbage? And I find it frustrating that you have experts, I'm saying that very facetiously, you have experts that are just pumping this. It's up 19,000% in the last 56 days. And they're like, oh, we're making all this money. It's like, it's a scam. It's an absolute scam. It's like Pepe coin. Sorry, Pepe, not to bag on you, but Pepe coin. This is, you guys have seen the site. It even says on their page, this thing has no value and doesn't do anything. It's just for fun. Well, this one has gone by the way the dodo. It's not as popular, but there's always these stupid ones like Bonk that pop up, and it's idiotic that people could be. They should be fined, right? Yeah, the Crypto Man Ran, Invest Answers, and anybody else who's actively out there telling you to buy Bonk should be fined by a regulatory agency because they're basically telling you to buy a scam. While I can't say I'll never recommend a scam, at least I'm going to go and do my due diligence as much as I can and hopefully avoid them. I got caught with Celsius and Voyager. Were those scams? Not really. I think they just they were poorly run and had problems with their business model, but they were trying to accomplish something as opposed to, Bonk or Shiba Inu or Dogecoin, these type of garbage things. As you get Bitcoin to sponsor you, Bitcoin doesn't have a centralized entity. That's what makes it work. There is no centralized entity. I'm not big enough or influential enough to have Bitcoin sponsor me by any stretch. That would be great. I'd love it. That would be great. Why are those coins being listed on major exchanges? Money, Robert. So here's the thing. If I have, let's say I am Coinbase. Now, Coinbase is a little bit different because Coinbase is a publicly traded company in the U.S. and they have regulation. They have regulators breathing down their neck. But let's take Binance, for example, who has a U.S. operation and an international operation. If Bonk is one of the more popular ones that people are talking about right now, and I don't list it, I may lose customers. A customer may actually go out to another exchange, take their assets off my exchange, and go to another exchange to trade this garbage coin. I don't want that, so I'll just list it. And I think there should be some accountability for the exchanges. Like, look, you're listing something that, like if you list Pepe coin, it says this does nothing, it's a joke. You shouldn't be able to be allowed to trade that. But, it kind of goes back to when you had mortgage lenders back in 2006, 7, and 8, right? They were under mortgage quotas. They had to sell a certain amount of mortgages. At a certain point, you run out of all the qualified people. Those with 800 credit scores. Oh, now I got to dip into the high 700s. I've gone through all those. They all have loans. And eventually, because I'm required to fulfill a certain amount of loans per month, I'm going to start lowering my standards. Because if I don't approve this person's loan, they got a 600 credit score, they're unemployed, they've got $100 for a down payment. If I don't approve that loan for that person, they're just going to go somewhere else and I lose the money. That's kind of the same attitude, right? And that's what got us into problem in the financial crisis is the integrity of lenders, I think, just disappeared. They're like, well, if I don't do the loan, someone else will, so I want the money, I'll take it. So that's why I think a lot of these ones are being listed, Robert. It's just, if I don't list it, People are going to leave and go somewhere else. All right, let me run through here real quick. I think, let's go to, again, there's no real earnings. You had FedEx today, but tomorrow I want to bring up your economic calendar just so you can see Thursday and Friday, and then, of course, I'll be gone. But here's your Thursday calendar. The only reason I bring this one up is you have a pretty big announcement happening tomorrow, not just for U.S., but you've got Canada and the U.K. coming out with some big announcements. Number one is the final GDP numbers here for the U.S. Remember, there's talking points by Jerome Powell and the Fed. He's talking about growth. He's talking about inflation. He's talking about unemployment. Now, he should only be talking about unemployment and inflation, but growth has come onto their radar as well. So he talks about GDP. That's one of the data points he's looking at for rate increases. Now, right now, expected to be 5.2%. Here's your historical chart of it. All right, this is an annualized number. And you can see we've been pretty flat to slightly downtrending. All in all, that is an important announcement. That's going to happen 1 hour before the markets open tomorrow. If you're trading in Canadian dollar, you have retail sales at that exact same time. They're expected to do better on retail sales numbers. You also have retail sales coming out for the UK, which are expected to get much better. Now, the last piece here is going to be what happens on Friday. Friday, you have durable goods orders, you have personal income and spending numbers, you have University of Michigan consumer sentiment, and you also have new home sales. Now, keep in mind, that is the beginning of the Santa Claus rally will be this Friday. So we'll see how that one goes. I don't really have any dog in that fight or money on it. Again, most of my stuff is on silver right now. I'm long a little bit of Walmart, and that's pretty much it at this point for my positions. Okay, last minute questions here. What if they make the exchange responsible for what they list, which they should? Again, it just all we need is regulation. We just need the SEC to come in and say, listen, if you sell this, they're called shitcoins, Pepe or Bonk to your customers, you are selling something that is a fraud, and therefore that's on you. You will be fined. Coinbase would delist those things right away. Coinbase wants to be legit. Kraken wants to be legit. Binance wants to be legit. But the regulatory agencies have not given them the framework or guidelines to say this is legit and this isn't. They just fine them. They sue them. To me, that's the wrong way. You need to, you educate and you inform someone about how to do things the right way. And if they violate those policies through clear education and understanding, then you fine them or you sue them. The SEC, unfortunately, does it backwards. And it's not just the SEC. I would argue it's the FTC as well as other government agencies. They will just sue you outright just to start off with and then go backwards from there. Today's drop might be small compared to tomorrow's potential rally due to the big GDP. We'll see. I don't know about that one. You should not be able to see a chart of Bonk, yeah. I get it. I know you shouldn't. Seeing the chart's one thing. It's being able to trade on them. That's the part that I have a problem with. Again, you could always go to a decentralized exchange to trade those, and that's what these centralized exchanges are worried about. If you look at Bonk, I don't trade Bonk, and I will never trade that garbage. But let me just show you here real quick. I'll go to CoinMarketCap, and I'll show you where you can trade it, right? Because that's another thing is if it's so popular right now, people want it. So let's go to BONK. Here's Bonk, right? And what makes this one so great? It's on the Solana blockchain, and that's what's kind of helping Solana surge. I'll go here, go to markets, and you can see you can trade on Binance, Coinbase, KuCoin, Gate.io. I don't see Kraken, I don't see Gemini on here, so these most likely are not available in the U.S. It says Coinbase Exchange, but that might just be Coinbase's international operations. So I'm not sure if you can trade Bonk on that one, but if I'm Coinbase, I certainly would not be listing Bonk. It's just too much of a risk to me at this moment in time. Let's see. How come Gemini have these issues? Well, they all have issues, right? Right now, they all have different sets of issues. Coinbase is probably in the best spot, at least in my opinion, just because they are regulated from the SEC. They're a publicly traded company, so they are under a lot more scrutiny than some of these other exchanges. So I think that gives them a little bit of an advantage in my book. And keep in mind, I think I mentioned this yesterday, out of the 13 companies filing for spot Bitcoin ETFs, one is going to do self-custody, which is what I do. It's like hold your crypto on your ledger here. The other 12 are all going to keep their Bitcoin at Coinbase. That's going to be just huge for Coinbase. I think today was actually a good day. Let me see here real quick. Look at Coinbase here. Coinbase continuing to surge. A little bit of a stall today, but it was up another 0.42%. I mean, it's been just a monumental rally. God, this might be the one I look back and just really kick myself. I really wanted to buy Coinbase, and I just didn't do it. Oh, Robert is on Coinbase? Yeah, that's it shouldn't be. Let's go Coinbase, and I'll just see if I can buy some Bonk. Do you want to do it? Should I just buy like 50 grand worth of bonk right now? Just to have some fun? All right, let's go get rid of that. I'm just going to go here and go to bonk. Let's see if I can find it. Yep, I can trade bonk USD. Crazy. Let's see, just for fun, how much cash do I have in this account? I have 147. I'm just going to go and buy at market $100 worth. I don't even know why. I shouldn't support this at all. It's annoying. It's a kind of frustration that I do it. But you know what? Just because you guys can all watch. I'm buying right now $100 worth, and that is 5,279,000 bonk tokens. All right, why would you ever buy bonk at this price? But there we go. Cost me 80 cents worth of commissions. All right, so we bought bonk. It's now part of this portfolio. I don't really have much money here. Let's see. Just make sure it's there. USDC. Yep, there's my bonk. 99.23. All right, we'll keep an eye on that one going forward. I will not be rich off this one, buddy. Yeah, how funny would that be, though? You're like, oh, my, Merlin made $8 million off $100 worth of bonk. Oh, my God, Alan, now you're getting on my nerves. You know it's not going to go to $1. All right. I've been selling puts on coin at the money, hoping to be put to stock. It just keeps going up. I should be doing that too, Lisa. The good news is you're collecting some nice premium, right? Because the volatility on that thing is high. The risk involved is high. Therefore, your premium is probably pretty good. Yeah, just to feel rich. It's funny. There was one happened a while last year. The year before was called Lunk. That's when LUNC went under, and I had, I think, 55 million, John, 55 million of those tokens, and it ended up rallying a huge amount in a very short window of time, and I just dumped it. Again, I don't really buy into shit coins. You look at this list I have over here at Coinbase. Ethereum Classic, this was an example. One of the students got her Ethereum stuck, so I bought some to show her how to move it around. That was step number one. Bonk is garbage. ICP started off as a really good company, but it's just died. It's just terrible. Flare was given to me. I love Render, and I like Engine. One of the ones I've been talking about quite a bit with you guys has been LivePeer. If you saw LivePeer today, LivePeer was up, I think, 20%. One sec. LivePeer's up 20% today. Looking good. I mean, this thing was just at $3 back in June, and we hit today almost $11 on it. So it's been going pretty good. All right. Yeah, you made $1 million in the bonk and had it in a Phantom wallet. Oh yeah, well that's why you keep your crypto in spaces and locations that you know and trust. All right, we are at 55 minutes. I'm gonna wrap up. I should have had a cocktail today just because it's my Friday equivalent show. Again, I am not gonna be doing a show tomorrow or the next day. So Thursday, Friday, Monday, Tuesday, Wednesday, no shows because I'm going to be gone. I will do a show on Thursday with Jerry Baldwin. Friday, I'll have Larry Jacobson on the program. That said, I will not get the chance to talk to you guys before the holiday break here. So on behalf of myself and all my friends, wishing you guys a very happy holiday. I hope you guys do something fun. Go spend some time with some family. It's not about necessarily a religious thing. It's about enjoying life. We are right now spinning around on a giant marble in a universe full of other marbles, and how we don't hit each other or have other life forms out there is crazy to me. So enjoy while we got it, our little oasis here on Earth for the short time that we have on it. So cheers, happy holidays to all of you. Thank you for all the support. I will see you guys next Thursday with Jerry Baldwin. Take care and have a great holiday.